Get this out on Twitter. Oh, the week is over. And see who we might get in the live stream tonight, hanging out. AMC kind of a rocky start today. Hey Paul, how's it going, man? Good evening. How'd that storm treat you? Get plenty of work in plowing driveways? I know we are finally getting a warming trend up here. Could see temperatures in the high 20s next week, so that'll be very nice. More importantly, seeing overnight lows above 10 degrees. Positive, not negative. So definitely looking forward to the warming weather. Let's see. What am I? Oh. I'm not even sure what I was looking at there. It's funny because, with President's Day, it was only a 4-day work week, but I ended up getting, I got called out on Monday, had to go drive in what I found out later was blizzard conditions. And I got to it was about a hour 15, hour and a half drive down there, and right as I pulled into town, they called and said everything was working again and I could go home. So I'm just doing a round trip drive and collecting 4 hours of overtime for that. 3 inches of sleet and snow. Oh, the sleet, that just sounds like so much fun. I'm sure you absolutely loved it. So yeah, how did you make any moves in the market this week? I know I touched on it a little bit on Claybo's stream. I did. I have entered rather than cautious safe trades. I have cautious moderate trades. I have cautious aggressive trades going on right now. I actually am kind of bending some of my rules. Well, not really rules; they're more like guidelines. I'm parlaying with my brokerage. They're not really rules; it's more of a guideline, more like guidelines. GameStop did not do as well as AMC today. If we compare the two directly, PROG, little bit of interesting, nice flat period in there. A lot of red though in the market today. SPY, of course, closing up on the day to close out the week. Let me jump in here. Looks like things are settling down though in after hours. It doesn't look everyone jumping out and starting their weekend. Not too much excitement. Kind of hoping Shredder pops in here because when I was talking about the options I entered into today, the buzzer beaters, He was a little confused. He thought that I was getting shares of AMC for 94 cents each. So just bought one Apple share, buy one every 2 weeks. Hey, Paul, that is how you grow. That's how you grow a portfolio. Just making those regular investments. Making them on a schedule. Now, was it you who had asked about setting up an account for, was it your daughter or your granddaughter? I know someone had asked me about setting up an account, I think it was for a grandchild, and they were asking about, recurring investments, setting up just to where, once a month or every 2 weeks, making regular investments, just kind of a set it and forget it, hands off type deal. But yeah, anytime you can go out there and have a schedule. And your grandson, yeah, anytime you can set up a schedule and have it to where you're making regular investments. Well, first off, you're making regular investments, you're going to be averaging down. Just overall. And one share of Apple. Oh, let me pull it up on here. Keep going to my phone, and it's been a long week. All right, so we'll pull up Apple stock here. Apple stock is at 165.04. Yeah, AMC at 94 cents. She'll take two. Yeah, that's But yeah, it's just for people who do regular options. The way I wrote it out, makes perfect sense. But it's confusing when I put in that I'm getting AMC at 94 cents. It's like everyone's like, what brokerage are you using? It's like, no, I'm not trading on the dark pools. I'm doing everything I can to be on a lit exchange. No shenanigans going on. Am I on PROG? Oh no, I'm on Apple right now. Now, what do you use for your trigger? You say you just you buy one Apple share every 2 weeks? Because do you try? Do you specifically watch? Do you set a limit price for your one share based on where the market's at? Do you just go in and YOLO buy that share? Do you time it out at all? Because there are other things you can do, especially because I know you have Robinhood as well as your primary brokerage for that. What you can actually do for, it's a little bit, you got to check and make sure your banks, how they treat it. Some banks limit the number of transactions you're allowed, or they'll charge you for additional transactions, which you want to avoid. But if you are of the set it and forget it mentality, one thing you can do is kind of look at where the stock is. So what you can look at is, and this is just one of many strategies that you can use to grow your position a little bit more. So looking at it, when wife gets paid, price not important, long-term hold. Okay, so part of long-term investing is averaging. And the fact that you're not looking, you're not too big on exactly when it happens. So one trick you could do, depending upon how the finances roll, and by roll I mean how they come in. Do you drop lump sums into your account, or do you do direct from bank account? Is it money that's set aside in a separate area so it doesn't get touched? But looking at it, so, and this is just one technique you could use. So you average, on average in a 2-week period, there are 10 trading days. So if you look at the highest price within, and you can zoom out the graph, you can look at the graph any way you like. But looking at it, so let's just say that we're looking at a high of, rounding it off to the nearest $10 mark, would be getting ahead of myself, would be $180. So one thing you can do, and this will actually help you grow faster over time as long as it stays below that price. Through Robinhood, you can fund money. Okay, so through Robinhood, you can even set it up to where you make your investments, you make your purchases on the daily, to where every day you make a purchase. So what you would do is, if in a 2-week period you've got 10 trading days, if you're using the 180, because we took the highest price we're seeing and averaged it down, or rounded to the nearest $10. Doesn't matter whether it's down or up. If you took it and set it up to where, if that money is set aside and you know that money is always going to be set aside, you could set it up to where every day it'll go in and automatically purchase $18 worth of Apple. So in a 10-day period, it's going to end up spending $180. And it'll usually go always about the same time each day is when it would go through and make that purchase. So instead of just every 2 weeks, picking that one day, and when you make that purchase, hoping that you buy it on the low and it goes up on the high, or whatever mentality you're looking for it, it would actually help you over the long run to get a better average. Just in the fact that over the span of a week, and let's or 2 weeks. So what do we got here? Let's go. Oh no. We want on the 1 hour, and so what do we have here? This is the 1 hour, right? Yeah, it is the 1 hour. Okay. So I make sure I didn't confuse myself. Let's go in 25th. Okay. So essentially, let's say it goes in and it would purchase at, okay, these are at the 30s. Okay. We'll even use okay, we'll go off 10:30. That when this 1 hour block opens at 10:30, essentially, so starting here, you would get $18 purchase at the open, and you'd be buying $18 worth at $170.99. So you'd be getting essentially a little bit more than a tenth of a share. Probably doing rough math here, 0.12 of a share for that purchase. So that was on the 15th. Now we go to the 16th. We want 10:30. At the open of this, it was at 171.87. So again, you'd be getting not too far off the same price. But see, as you would go through, if you bought it on, say that the money came in on one day, and you bought right here, say you bought on this, and you bought your one share for 170.73, and then you see the price start to drop, keeps dropping the whole rest of the week, the whole next 2 week pay period, the stock is below the level that you bought at. Well, if you had bought at 10 o'clock. So you make your first purchase 10:30 on the 15th at 170.90. 10:30, 171.87. 10:30, 179.90. So that's back at the same price as you got on the first day. So the second day you end up paying a little bit more. Go down to the 18th. Now you're getting 170. So you're getting it almost $1 cheaper for the same purchase. So as you can see, Paul, this is a way you can average down. And you are spending a little bit more because, yeah, if you just ran out and bought the one share at 170, you're just paying that amount. But the fact that you're allocating $180 every 2 weeks, every pay period, whatever cycle you're on, you're allocating $180. But you have the greater potential for if the stock gets pushed down, you average down. Now, if the stock's moving up, it would average up. So it's kind of a little bit of give and take, but it would give you more of an overall average as far as the shares you would get. Now, if you saw a super good dip and you knew that the stock was going to bounce back up, yeah, definitely going in and buying one share on that super dip and watching it run up, it would make you more money overall. So just kind of go in and see, are you looking more overall? But if you're long term, you're looking, you're going to be cost averaging anyway in the long term. Whether, if you're holding it for 10, 15 years, however long you're holding it, every month you're still, or every 2 weeks, you're still making those purchases. So in the long run, you're still averaging out. But this gives you a little bit more of a fine tune for your averaging. And it's a way, instead of just, buying one share, if you see it get up around the 180 mark, if Apple runs up to 180, that's still looking at buying one share every 2 weeks. And if it gets to that point, well, who's to say you can't decide instead of $180, you could bump it to $190 at that point. World News is on at 6:30. Hey, Shredder, how's it going, man? Anything interesting going on World News? I'm assuming a lot of it's going to be on the conflict in Ukraine right now. Yeah, see, yeah, you might end up getting 1.1 or 1.2 shares. And see, yeah, that's now, see, when I do my investments, I try to find a little bit, I look for a little bit lower prices through the day. I do use limit orders for my long-term investment portfolio. I'm trying to get a little bit better deals. That's why I don't do the every day or every 2 weeks anymore. I try to fine tune and try to get better fills. Just nitpicky. Just trying to squeeze that extra little bit of money out of, or a little bit extra amount of shares out of my investments. I'm in Georgia till April. Wife is going to work. 30-minute drive. We'll keep in touch. YouTube TV. Georgia till April. If you're in Georgia till April, April, that's the Masters tournament down at Augusta National. That'd certainly be worth checking out. I know when I was at Fort Gordon, I couldn't get tickets to go to the Masters. I wanted to go one day just to check it out. Once in a blue moon, 0.9, can't win all time. Yeah, that's, but see, you're really, you're only going to see that 0.9 per share if, you're talking 0.9 per share, you're only going to see that if it gets above the $180 a share mark. As long as it stays below 180, you're still, you're running off a dollar amount and a dollar amount based on an elevated price. So until it hits 180, you're still going to be making at least a share a month, or a share every 2 weeks. Picking peaches for... He's picking peaches for Claybro. Yeah, but Paul, Apple is definitely a good stock. I'm not sure how their dividends are, but yeah, if you're using, I'm fairly certain you're using drip. I think we talked about that before. Yeah, no problem, Shredder. Thanks for stopping by and visiting for just a bit. I try to be here, Monday through Friday. I try to be here at least once a day, sometimes twice a day. Just depends how my work schedule goes. This morning stream. What was going on in this morning stream, Paul? Did I miss something? So yeah, Paul, I did a thing. I am moving back towards opening up the full carbon fiber Viper again. And hopefully it plays out good, because I like money and I like shares, and the full CFV gives me both. But yeah, Paul, no, Paul, the carbon fiber Viper is in reference to my option strategy that I run. It's a multi-leg option strategy that you can use pretty much at any level, and it's a combination of bull put spreads and covered calls. Oh, yeah, that might have been from a Dodge Viper. It was just, I searched images and everything. The original Viper emblem had the snake facing head on with the fangs. I don't know if this is an updated one that an updated emblem. I don't know if it's actually used on a car or just something that somebody designed. Yeah, I pirated it. It looks awesome. I liked it. I'm like, yeah, this definitely works. Yeah, in fact, one of my uncles up here does. He's got a printing machine, and sometime in the future, I'm going to contract to him to get some stickers made. And of course, the second sticker, the first one would probably go on my vehicle. The second one I would most likely send out to Clay. Surprise him with a little bit of merch from my channel. I know through there actually are shirts and coffee cups available through Streamlabs. If you search my channel on Streamlabs, there is merchandise with the logo on it. Hats, shirts, hoodies, cups, that type of stuff. So yeah, what I ended up doing today, sign you up also. Yeah, that's yeah, definitely to get word out on the channel. So yeah, so as I was saying, I am entering what I call cautiously aggressive. Now, by cautious, because I always hear, or I always mention that don't risk your entire position, risk a percentage of it. Always keep part of your a good portion of your portfolio in reserve if you're going to be playing options. No, it's Streamlabs. It's actually the streaming or the capture capture site that both Claber and I use for our live streams. But yeah, so you never want to risk all of your position, and I like to keep buffers, but especially everybody talking this that March 3rd is supposed to be this great and wonderful thing that's going to go on, and the MOAS is supposed to happen March 3rd, March 4th, or margin calls. Everyone keeps putting sensationalist titles and headlines out there, and most times they don't pan out. Most times they actually work the opposite. So on the screen right now, it's funny because when I say a buzzer beater, my order got filled 1 minute before close. Now, with when you're trading shares, you can put in limit orders after hours. You can still get filled. You can still trade stocks after hours if your brokerage allows it. And the way to do it after hours is using limit orders. Options cannot be opened or closed. You can't do anything with options in off hours. They cannot be, execution does not happen unless the market is open. So 1 minute before the close of the market, I got this fill right here at 94 cents at the middle mark for the 1850s ending next Friday. And the exciting thing about it, looking over, I've got a theta of 9.5 cents that's going to be working for me. These have the potential, and looking at the delta, if AMC sees a standard Monday downward, a gap down or a downward volatility spike of $1 to $1.50 from where we are right now, I will be able to close these out within 10 to 15 minutes of the market opening, and I'll be able to capture about 75 to 80% profit. And I will do that in a heart. I will, if I see 70 to 80%, these are going to get closed. If I see that kind of profit, these will be closed immediately. And then I'll just roll it into bull put spreads. I saw a YouTuber say MOAS has not happened by March 3rd. It could take as long. See, at this March 3rd date, that I've not seen any rhyme or reason or any, why did they pick an arbitrary date like March 3rd? Because the market's still open March 4th. Why not March 4th? Why not a run up through option chains, through option strikes that have not been hedged for and cause a gamma squeeze? I mean, they're hunting headlines. They're using clickbaity titles. So yeah, looking at I got my fill right at 94, which is cool because the market closed with it right at 94. So I know where my spot is, which means that anyone that popped in and was showing how covered calls work, it's like, well, the market closed and froze in the exact at the exact mark that I was using. Now, when I got my fill, I believe it was at 17.62 a share. So we are actually 4 cents higher. I know it has been bouncing around. I'm pretty sure I got the... I'm not sure if it tells me where I got my fill at. Well, I can just go on the 1 minute. Where are we at? $1,600, $1,559. Okay, so I got my fill at 1764. because it was on the minute. So yeah, 1764. So we're 2 cents 2 cents off from where I got my fill. So if we see a drop down into the mid 15s, and I will probably see profits over 90% on these contracts. So that's why I said, I'm being aggressive because, normally you'll hear me talk that I like a nice buffer. I like a couple dollar buffer, which, I could have gone higher. I could have gone safer. I could have figured, the 20 mark with almost 60 or 8,700 contracts out right now. I could have gone with the 2025 and gone for 46 per share. But I just, looking at how the market's been reacting, our opening Mondays, we do get a pretty good spike down. So I think, looking to do a next day flip on these, or a next day swing, if we get that downward volatility spike at open, then these will be closed out, and I can, at that point, my shares will be released. The cash will be in my account. I don't have to, I'll have to pay a little bit of cash just to close them out, because I sold to open, so I'd be buying to close. So yeah, I've a little bit of the money in the brokerage I would have to give back just to close these out. But if you're capturing profit, why not? And a lot of times, depending upon what your risk tolerances are and how long you feel like holding, even going in capturing 20-30% profit, if you get 50% profit, and that's what makes selling a little bit safer, because, well, when you're dealing with stocks, a stock will do three things: it'll go up, it'll go down, or it'll go sideways. Well, as a seller of options, 2 out of 3 work to your advantage. You are limited because, I'll never make more profit than the premium that I collect. That's, that is the maximum profit I'll make. So yeah, buying calls and stuff, if the price runs up, your profit potential is through the roof. But all the people buying the $140-some YOLO calls and holding them almost to expiration and waiting for their YOLO calls to print on the MOAS, that's not economical. You're throwing money away if those expire. If they expire worthless, you're throwing money away. So I like to sell because I'm collecting money, and I've got plenty of outs. Now, the same thing when you're buying options. You have the same ability to get out of your position. The problem is people like to hold because they see those dollar signs growing, and they're growing and they're growing, and they go away from it for a while. They're not watching the screen. Price comes down, or they wait too long, and theta kicks in and just decays their money away. To where theta is my friend. So yeah, hopefully those, and it doesn't even have to be Monday. You see downward gaps. We can jump back over here. Now, we did not get a gap this morning. Let's go to the next day before. Huge gap down. This is what I'm talking about. So from 1577, it did gap down 75 cent. 75-cent downward gap just from close of one day to open the next day. That would still end up that would still be $35 profit, somewhere around there. Gap up on that day. Gap down with a rundown at open. So we look at close. Close was just under $18. It ran down under 17. That right there would be $50 to $55 profit. From the close to this low point on the downward push, that'd be about a $55 profit. And you do options long enough, and learn how to calculate on the fly, you can know what you're looking for the next day before the market even opens. Once you learn how to read the Greeks, once you know what the numbers mean, you can look and see, just off, my theta, that's roughly $9.50 a day that I'm gaining in value on my contracts, or that's coming off if I have to close out. If it moves $1, I know that's another $44 that I'm making there. When you start to really understand the numbers and look at how the stock's moving, and get to always, if you're going to play options, it's best to play it on a stock that you know. Play on a stock that you can not really anticipate, but you understand the movement that the stock can do. And that is totally what my options play that I entered today was. I know that AMC has the Monday morning potential to gap down and maybe get a little bit of a downward push in that first 15 to 30 minutes of the market. And that's what I'm banking on. Because if I will always try to close out an option position as quickly as possible. If it's making me money, if I see 50% profit Monday morning, I might go ahead and say, okay, that's good. I'm gonna pull the plug right now. And the great thing is, I can sit back and wait for another run up or a run down before I enter in another position. No one says once you enter an option position for the week that you're done. You can easily. I could sell these, and this will go even if you're because I can buy and sell the same options all day. I can sell a covered call. Price goes down. I can buy to close. Price goes back up. I can sell another covered call. It goes back down. I can sell. You can sit there and do that all day long. That's how some people make their money. The high frequency traders. If you are susceptible to pattern day trading, what you can do is, and today was actually a perfect setup for that. You can sell to open. You open your position on Friday at the end of the week. And Monday rolls around, you exit your position. Well, you have that money now. Monday's done. You've already entered into your trades. Tuesday comes along. You can enter another position. Wednesday comes along. You can close that position. You can sit there and every day you open one day and close the next day. If you have good technical analysis, if you're sure of the stock, if you can handle the risk, you can sit there and literally swing from one day to the next. Open, close, open, close, open, close. And if you are expecting the volatility spikes, if you go ahead and open your position as the market is wrapping up for the day, you enter your position right before market close, and if you know it's a stock that has a downward spike in the morning, then all that happens is that next morning when it opens, you close out your position. Or if you got a stock that likes to run, if you're playing, if you're buying calls, you buy your calls before before the market closes, and you just wait, and then the next day, if it gets a volatility spike upwards, so. There are multiple ways to play options. You don't have to just play options, buy calls when the stock is running. You can sit there and, I know I've said it many times before, you can play the stock both ways. It doesn't matter whether it's going up or down, you have the potential to make money. And that's what we're all here for, is to make money. Unless you're on Claybro Stream, then you're just there to make friends. But anyone who is in the stock market and doesn't want to make money, they can just cash at me all their money, and I'll gladly invest it. If they're in the stock market to lose money, they can just send it over to me. I promise, I'll do my best to lose the money for them. I don't know what I was doing there. I was doing the fingers crossed, or the whole. I promise I'm telling the truth. I'll do everything I can to lose that money for you. So it's watching pre-market, good info if you got the Yeah, definitely. So if you entered right at close and you're trying to get a feel for if you know you're looking to make a move or exit a position early in the morning, you know, so for me it would be 8 o'clock is if you're on Robinhood, you notice at is it 8 o'clock? It would be 8 o'clock my time, where it switches over to the pre-market on the new day. Before that, it's still showing the after hours from the previous day, but at 8 o'clock for me would be 9 o'clock for you. It switches over, and that's the pre-market on the opening. But anything you're on, watching the pre-market, if you know if you got a position you're looking to exit, jump on the pre-market, kind of look and see where it's going. You can actually go in and say AMC in the pre-market next week is down. It's down $1.50. Well, I look at my options. I know, when I sold this. When I sold this to open, it was at $94. We are down $1.50 in pre-market. So I know, looking at, you can go through and you can calculate. This is where knowing the Greeks and knowing how they affect each other is really important. So we've got just shy of $44. 43.72 cents. Just shy of $44 per contract. So if we're down $1.50, I know that by the next round, the next dollar increment down, the gamma will be applied to the delta. So I know the value that this is going to end up changing. So with it going down, we would be looking at the next dollar would be approximately 32. Cut that in half, 16. So add 16 to, we'll call it 42. So we're looking at 78. So I would come back behind, and so I know this price has a potential to be dropped by 78 cents per share, which means we'd be looking at, is that 16 or 26? My math is, my brain's fixing to give up on math. I could go through and say, if I know that this number is going to be around 24 to 28 out at open, I can actually go in and set an order for when the market opens to execute at 30 cents to buy to close. Because remember, I sold to open, I collected the premium of 94 cents. So in order to close this, I have to buy to close. So I could actually go in and set up my capture profit during the pre-market hours. If I know the levels I'm looking at, and if I run through the numbers and realize how much I want to collect, well, if I collected $94 worth of premium and I'm willing to pay back, pay 30 cents per share to close, well, I'm capturing over 60% profit right there. And I'm doing all that while the market's closed. So yeah, watching the pre-market definitely gives you a jump on the day. And if you know the numbers you're looking for, if you know where you're willing to capture profit, you can preset everything to where the market opens and it's automatic. And I don't, just because I put in 30 cents doesn't mean I'll get filled at 30. It may, if it opens and because of volatility, say it is down at 22, it'll still give me, it'll execute at no higher, it'll purchase at no higher than 33 cents per share. If it's 27, it meets my requirements. If the market opens at 22 cents per share and I've got a limit order for 30, it'll execute at that price, or at the first person willing to take, first person within that window who accepts would automatically close that. Yeah, because I sold to open, I would be buying to close. And stop limit, let me see the exact, let me find the exact wording, because I know you're on Robinhood too, which means that the wording on this is really good. Oh, what do we get there? Oh, no, I don't want that. So essentially, I would just go in go to trade. Oh, they finally got the roll position going. So what I would end up doing, oh, what's that? I would go back into the options. I don't know if you're following along, but I click on my options contract, and on Robinhood, it'll actually separate your options from your stocks. I don't know if you've done options on there before, but it'll have, right below where your buying power and your headlines are. It says stocks right now. If you had options, the options would be on top of the stocks. So yeah, I would just click on that, open the contract, open it up, and it would have the whole trade thing, the little button that says trade on it. Would click on that, view all options, and because this is a simple one-leg contract, all I would do is go back into the options for March 4th, and right now it's still set up to sell call because that's what I did. All I'd have to do is go from sell and click on buy, and now it says buy call. I could go in, enter my short call. And instead of, it has the limit prices, I could go in and, I'm not sure if let me see if it'll actually let me put that low in. I can go in and put the 30 cents, and it'll calculate out the price, max cost $30. So it will not go in for any more than that, and it'll be swipe up. Can I actually do this? AMC short call order queued. Quantity entered, max cost, limit price per share, released collateral, commission paid, and market is closed right now. Your order placed on February 25th will be set at the start of the next trading day. So it will it automatically, those are the exact things you'll see. And see, I can actually right now just leave this in. I can leave this through the weekend, and if everything goes the way I actually have it laid out, it'll automatically go through, and at market open, if it's within ranges, it'll automatically exit those positions for me. I'm going to close them out right now just because I want to see how the market's going to look, just in case I forget to do it Monday morning. I wouldn't want to, have that in there if I know that I'm going to get the fill I want anyway. But I'm kind of waiting to see what happens, and I just have to kind of want to get a feel for how the market's going to be doing in pre-market. So yeah, watching pre-market is kind of important. But yeah, just because the market is closed doesn't mean you can't set your moves up. You can't execute on options, you can't execute your moves or actually make your plays until the market opens, but you can set everything up in advance. And see, because I did that at the last minute, I'll replay a video about that trade. Yeah, there's I like to get information out, and I like to get as many any examples out, and yeah, if to timestamp where we're at, that way but yeah, options, it is a whole lot of math, but essentially, if you understand the fundamentals, the math comes naturally. You can a lot of times, before I even started putting lines on the charts and stuff, I would eyeball most of my trades. And I got good at eyeballing trades. Just getting a feel with what the stock's doing, where it's at, what my delta theta and premiums were at. I could just eyeball a lot of my trades and be like, okay, yep, that looks like a good trade. I'm going to go ahead and enter in it. So yeah, there is And do I have... Hey, I do have lots of marks on the screen. I was wondering how many marks I had. Do a little bit of housekeeping here. Delete. The I-2080, I think, delete. Hey, back down. Delete. Delete. So what are we looking at here? Yeah, and Paul, certainly if there are any aspects you don't understand about it, if you need it explained in higher detail, or anything like that, I can certainly try to break it down as far as I can to make it more understandable. So let's go ahead. We are going to drop a line here. $18.50 is gold line. Now, because I collected 94 cents of premium, 1850, 94, 1944. So 1944 would be where my red line is. If executed, wow, whole lot of scrolling. $19.44. Okay, there we go. So what we're gonna do, we're gonna drop another line at 1944. We're going to turn this line red. All right, so let's crunch this back down. And what number? Let me check here. I want to... I want to see if I can get this open at the same time. I need the current Greeks, but I'm charting here, so I don't want to switch over to the option page while I'm charting. Okay, delta gamma 45. So that'd be $1.70. So 50. Oh, come on, brain, start working. 44. So yeah, that'd be right about 75 cent profit. And oh, yeah, that was right. I'm gonna do a little bit interesting charting here. I'm the reason calculators were created. And it's funny, I do so much math in my head, but my brain just is not working. Okay, yeah, that's what it was. Okay. Now, depending on how much of a nerd you are, this may be really, really cool. So we're going to take another line, 1614, and this line we're going to make green. Wish they had better looking greens. I'm not a fan of that green. So, Paul, right now you are getting a really good look into my mind right now, how my mind works. Oh, give me just a second here. So, Paul, do you have any idea what I just did with all those lines on the chart? This will be really, really cool when you kind of check it out and see what I was doing here. And it's just something that I like, that I usually run in my head. And like I said, I used to just do this all by eyeball, but now that I understand putting lines on the chart and everything, it got a lot better. Okay, so you have no clue. Okay, think of it as a traffic light. The yellow light means caution. The 1850, that is actually the fill price. This is where I filled at, or this is my strike price. So on expiration, if it's at this mark, my shares can be called away. Anything below this mark at expiration, I'm still good. I'm still in this good zone through here. The green zone is based off my rough calculations. If it drops below this line, below this 1614 at any point, because my initial fill was at 1764. So I calculated out roughly I was looking for 75% profit. So if it hits this mark, and as long as volatility isn't too crazy, I'm going to make at least 75% profit. So Monday, if we're in pre-market and it dips below this line, I know that I can capture 75% profit. The red line, this is my serious caution line. This is the equivalent of, so if I was executed on, I would collect $1,800. I would collect $18.50 per share times 100 shares on each contract. Now, I received a 94-cent per share premium. That's my money that's already sitting in my brokerage. I collected it for selling that contract. So if at expiration, if it's in this zone, I still made money on the trade. If it climbs over this 1944 mark, that is me selling my shares at $18.50 and losing the value of the premium I collected. When it hits this 1844, it is a loss. There was no profit to be made. And that is if I were to buy back in at that point. Now, if it executed, even if it ran up to 1990 a share, and I was executed on, but the stock turned around and ran back down, I can buy back in later on. And if it drops back below 1850, if I buy back in, I'm buying back in at a gain. Well, even if I bought back in anywhere in this region after it ran beyond there, it would still come back down, and I would still be at a gain. So this kind of tells me where my gain marks are, where my loss marks are, where my take profit mark is based on the reward that I'm looking for. And like I said, I usually like to see between 70 to 75%. And for me, this mark right here at 16.14, that is my 75% profit mark right there. So like I said, when you understand the Greeks and understand the math and how everything works, you can lay out a strategy like this and see exactly, based on where the stock is, how your trade is doing. And it's perfect. The gold line, once you hit there, that is your execution price. That is where, this is where your shares will be called away at this 1850 mark. You go above there, you're playing with the premium that you received. You go above, then that soaked up the amount of premium you received. You'll still just get that 1850, but now if you were to buy back in, it's going to cost you more than the premium that you also collected. So if that makes sense there. But at any time, now through here, if it runs up close, because of the movement in price, before expiration, I would still be showing a loss in this zone right here. It would not it would not flip over to show gains until the theta decay outpowered the price movement. So yeah, that's just kind of using graphing, and I know you do all the stuff on your phone like I do, but if you have a PC at home, and if you download Webull, and my referral link is in the description if you haven't used Webull before. But if you jump on Webull and the charting, this is why I use Webull, because the tools available to you are so phenomenal. Robinhood, I don't know about the desktop version of Robinhood. I've never been on it. I do all the trading from my phone. But for the actual, I'm here at home. It's aftermarket or pre-market. I'm doing my homework. I'm doing my research. I'm fiddling with my strategies. I love Webull for it because it is so powerful. The tools you have and the views you can get of it. But yeah, essentially, this is what I'm looking at when I make my trades, when I'm doing covered calls, and you can adopt this to pretty much every trading strategy, and you can of course just go to the options page and look and see how you're doing. Just see the numbers. Are you up or are you down? How much have you made? How much are you losing? But this gives you a good representation to see what the stock is doing and how it pertains to the trade that you're in. Yeah, thank you, Paul. That's it is quick. This is quick and concise, and you can pretty much show anyone. If you can understand a traffic light, green, you're good to go. Yellow, yellow is caution. Red is what's going on. It's pretty much something that everyone can understand, and just understanding when you're entering into options. You're either receiving a premium or you're paying a premium. You have to understand how to calculate that in to what you're looking at, because the premium will always affect. The premium will affect how you're trading, and the premium is also when you buy or sell. If you're buying to close, that's how much you have to pay to close. If you're selling, selling to close, that's how much you're going to receive when you're closing. And remember, to exit an option position, you always do the opposite of what you did to open it. So if I sold for every contract that I sold at 1850, in order to exit, I have to buy that same contract at 1850. And you know what the funny this is I shouldn't say the funny thing, but we get so many people in Claybro's stream. You get a lot of people in there asking about options, and Clay's even said it many times. Frank's got an options channel. Go check it out. to be able to sit down with somebody and right now we are one-on-one. This is, if you had any questions about options and if I could answer them, you've got someone here who could try to explain to the best ability and lay it out for you. And there are people asking, well, what about this? What does that mean? It's like, and Clay's like, well, Frank's got his own channel. Go check it out. And how often, we got 72 subscribers, and usually we see, it's been a little bit slow lately just because the market's down, but usually we see between 4 to 6 people on the streams, and it's like, even, it's not one-on-one at that point, but certainly, get good group participation and get everyone in, and, actually learn about options. Don't sit there and hear people talking about it and think it's some abstract concept that, that you'll never understand. That's my gorgeous charting. My shares are locked. For anyone watching the video, so if you have 100 shares tied up, what happens if the MOAS happens to your shares? My shares are locked up. They are, remember I said whenever you're selling you have to put up collateral? In this instance, my collateral is, for every contract, is 100 shares. So when I got on the stream, it said that entered into covered calls on 40% of my position. 40% of the shares I hold are currently tied up in covered calls. If the MOAS happens, my saving grace is, I will look at it in pre-market, and Monday, if it looks like it's going to run uncontrollably, because I can't do anything while the market's closed, but I have to look and see. I have to go in and set a stop loss. And for me, the stop loss I'm looking at, because I got in at 94, if I was going to risk 30% on a dollar is roughly 30 cents. So I'm looking right at about $120, $125, $130, somewhere around there. I will set as a stop loss. That way, if the MOAS happens, as it's running up, when it hits my price, it'll automatically release my shares back to me. It'll automatically close that position. That's what a stop loss on a cover call does. If it starts to run up, because in order to exit my position, if the MOAS happen through the close of options on next Friday, I could miss out on the MOAS with those shares. And that's why stop losses, especially with covered calls when you're waiting on a short squeeze play, having a stop loss is critical, because it protects your shares against getting taken away from you during a MOAS. So yeah, right now the shares that are involved in the covered call as collateral, I cannot touch. Those shares are locked away. Now, it may be possible I could do something cheeky on margin, because if you're playing options, you do have a margin account. I could play around on margin. I could, if I decided to sell, but I would still be hanging in the balance. If it ran up, this is the tricky part. If it ran up and I sold and somehow on margin was able to execute the trade and get my sell during the MOAS, without a stop loss, I would need it to come back down. Otherwise, I would sell, so I would have plenty in my account, but I would still be on the hook for assignment of those shares if it was still up at that price during the MOAS. Like if I decided, if I thought a pullback was coming and I exited at $1,500 a share, I'm like, yeah, I made the MOAS, and it continued to run up to 10,000. Then I would be getting margin called for the additional amount per share. So yeah, it is playing with covered calls, especially during the situation we're in. if you're not careful, if you don't set stop loss, if you don't understand the risk and set your stop losses, you have potential for all those shares to get called away. You won't get credit for them. You will miss out on the MOAS with those shares. So that goes back to the cautious aggression. I've still got 60% of my position that is it is dry powder. It is in reserve, and it's not getting touched. Usually I only will play with about 20 to 25% of my position. In order to make extra money to buy more shares, I'll risk a quarter of my position, but I take steps to make sure I don't lose it. Yeah, it's very interesting. Is definitely and that's that is part of understanding the risk behind it, because it's easy to go out and the other side of the CFV is the bull put spread. The great thing about the bull put spread, your collateral currently is going to be $50 per contract. Now, you're not seeing, $94 is how much I'm getting in premium per contract. In order to see 94, is that a typo? Yeah, that's not accurate. In order to see $94 per contract, well, you'd have to cut that in half. 94 and a half, 47? You would have to play bull put spreads at the 21 to 25 or 21.50 mark in order to see the same kind of premiums that you're collecting, because it is a lot higher of a risk, and because this is a spread. Not only instead of risking $1,850 worth of shares, you're only risking $50. So on that, risk $50, collect $20. Risk $50, collect $8. So you can see that the safer and the less risk you take, the less premium you collect. But still, as a seller, you have the advantage as selling options as opposed to buying options. When it comes to options, the seller always has an advantage. Just like when you're at the casino, the house always has the advantage. And that's part of it. I'm looking to. Today is actually the largest, most aggressive play that I have taken for the year so far. I did some, I've been doing lighter trades here. I've done some pretty decent trades in January. I did a couple of bull put spreads. Wasn't touching any covered calls on anything. Just pretty much bull puts was what I was doing. I did do some straight up puts, but I ended up just jumping in 10-15% profit and backing out of those. Wasn't getting greedy, not sure when the market was going to take a turnaround. But yeah, let's jump over. Let's get back on. So I still think 15s, on bull puts, 15 highs are looking good. So 15 high, which means we want the $14.50 to $15. So yeah, put up $50 of collateral, collect $8 premium. Right now, those look to be the safest on range right now. Just going off, I'm looking at this dip right here where it did dip below 15 just briefly. And in order to beat that, you have to go way, way, way far back here to the 9th? 8th or 9th of February. So you got to go back to 2 weeks or so, which know in the time of day traders and swing traders, 2 weeks is a lot of time. But looking those 15s, if you're looking at bull put spreads, 15 is your high, which would be your 1450 to 15s. So true, if you play with quarters, you win quarters at the casino. I'm not sure if you play with quarters, you win quarters at the casino. Yeah. Unless you get a good spin, if the one-arm bandit isn't that bad to you, you play with quarters and win dollars. But yeah, I get what you're saying. Everything's paid out in quarters. Yeah, that's it. Yeah, same thing if you're playing nickel slots or whatnot. It reduces your money lasts you a lot longer if you're losing, but you're not, you don't get you can't get those super big wins. Just like playing one line, if you're playing up here, we got a lot of penny slot machines. Well, you can play so many lines and so many multiples per line to where you can go in there and you're playing a penny machine, but it's $1.50 a pull. But a lot of them, I like to play the, oh God, what are the, I like playing the ones that give you the extra spins. If you get so many of the Infernos or whatever, if you get like 4 of those, you get multiples. If you get certain ones, you get so many free spins on there. I like playing those ones. But a lot of those, they're like progressive pots, and you got to play all lines in order to be able to capitalize on those. So yeah, it all depends. It goes down to risk versus reward. Risking $1.50 a pull, but the fact is, if you're playing towards a progressive pot, if you hit that progressive pot, the more you play in, the more you can get back. And a lot of people do view the stock market as, they're like, oh, playing the stock market is the same as gambling. To that, partly true, but for them to say that it's gambling, I'm sorry, but when you go to the casino and you're playing slot machines, you can't do technical analysis, you can't go through, you can't make logical decisions when you're just pressing the spin button every time. Penny machine, need to bet $3 to win big money. Not for. Yeah, I think most of the penny machines we have, the highest ones, I think it is $1.50 a pull though. I think that's however many lines times however many plays per line. The highest pennies I've seen here, I think are $1.50 a spin. I haven't been to a casino in quite a while, though. Last time I went to a casino, I walked in with, it was either $20 or $40. Walked around, checked the bank, saw if there were any new machines. Ended up going to the machines that I usually hit. I was in there for not even 15 minutes. I was up $70. I cashed out and walked away. And I think it was, I played a couple spins, got a couple decent hits, and I ended up hitting the one where it gave me like 10 free spins or 12 free, however many free spins it was. It hit that, and that was pushed me up to $70 profit, and that was when I walked away. It's like, yep, I had the objective. I wanted to get those free spins. I got those free spins. I made money. It's time to, I'm ahead, time to walk away. So not bad for less than, well, granted, I probably spent about 20 minutes walking around the casino, but less than an hour, and I made $70 in a casino. My God, it's 6:30 already. We've been doing this for quite a while now. But yeah, so when I started trying to get this fill, I I started with I think 5 or 6 minutes left in the market, and it was actually 98 cents. Oh, let me get back over to. Yeah, this was actually 98 cents. I had to enter the order a couple times to actually get a fill, and so I entered it at 98. Didn't get a fill. Entered it at 97. Entered it at 96. Finally at 94. That was when I got that. When I finally got a fill on it, because it was moving around quite a bit. I would have liked to have gotten the 98 cent. When I live stream plowing, I'll give you some info on the casino betting. Well, I actually back to. Oh no, there's nothing wrong with talking about your show. I actually love Science Channel, History Channel, cooking channels, do it your home improvement, that type of stuff. Home renovation shows and stuff like that. But one that I watched was on History Channel was Modern Marvels, and they were talking about casino tech. And all casinos are required to have. They have to average a certain payout percentage. And they were talking about not only the tech but the psychology of setting up casinos to where your looser machines are near the entrances and exits, near the food establishments, because they want people who are sitting down eating to spend more money. And by doing that, they want the people sitting down eating food to hear other people winning, so they finish their meals and hurry up and get over to machines. So when you're looking, definitely know what type of machines you like to play. I like the wild machines with the whatever wild cherries, wild flags, wild set, whatever the wilds are, with the potential for free bonus spins. Those are the machines I like. So I will find a bank of those in the area that psychologically the casino set up as an area that hits more often. But yeah, it was a really interesting program just on how the casinos lay out their machines. That usually the ones that are in the center areas, not near high traffic areas, those machines are usually a little bit tighter, because it's not every machine has to have a certain payout percentage or a certain win percentage. It's the casino as a whole. All the machines together have to be within a certain range. So yeah, they'll have looser machines at areas that will entice people into more gambling or more frequent gambling. Such as the entrance and exits. They want to get people coming in, let people as they're entering hear those machines, hear people winning, and the people run and grab, and they'll grab there's different gimmick machines out, not gimmick, but certain not featured. They'll have a certain theme to them, like Jungle Adventure or Aces Wild or Hot Sevens or Flaming Sevens or Flaming Chair. Facts. That's the casinos set them up in a manner. That's why I have that one bank. It's right at the entrance. It's right at the entrance. It's progressive pot, wild icons, and free spins. It has everything I want, but I still like to do a lap around the casino to see if there are any of those machines in potentially near the bar or near the restaurant. Looking to see if they maybe put some of those good machines in other parts of the casinos. But yeah, I usually end up going back to the ones that I usually hit. And those have been pretty. When I do play, those are pretty decent to me. I think I've actually won more than I've lost there, so that's a good set of machines there. Yeah, but definitely if you have any information like during your live stream, if I happen to be tuning in, uh, if you got casino information, but yeah, stock market, it's not a casino, but you could say it's my favorite casino where, you can use logic and reasoning to make better bets. Speaking of, how's crypto doing? Well, we're on the subject of gambling. All crypto up right now. How's my wallet looking? I like crypto because gives you a chance to do stuff on the weekend. Oh yeah, crypto's recovering nicely. I think it was Simon had posted that I think it was this morning or yesterday morning. Crypto was just getting hammered, and a lot of times, if I go on and see that crypto's getting hammered, I just take a step back. It's like I don't have to. I don't have to watch all the time, but yeah, everything. Ethereum up 2 1/3, 2.5 a lot of places. Doge. Oh, that right there. Sub 11. People keep saying Shib is dead, Doge is dead, this is dead, that is dead. Yeah, I pop in on crypto every once in a while. I'm I'm not actively swinging it or whatnot, but I do like good deals. The trouble is, I got to look and see how much how much capital I have floating around, not locked up into stop losses, not as preventative money. But I would like to pull some of these averages down for Doge and Shib. Bitcoin's coming up nicely. Unfortunately, I can't touch any of these because um, got a bunch of Dode. Oh, a bunch of Doge. Is that a bunch of Doge at 28 cent? And you see my average, I am below 16 cents on my average. I would like to average down a little bit further. Averaging down is good. I want to kind of have a look. Yes, Doge. Okay, yeah, that's what I thought. Silly autocorrect. Who is... God, I am still up 42% on Ford. I'm up 34% on ExxonMobil. Almost 20% on Bristol Myers Squibb. Goldfield, I am up 61.5%. Holy Toledo. Lithium Americas, I'm up 50.5%. God, I've got some winners in here. Gladstone Land, I'm up 31.5%. I was looking to see if, are there any places where I can shift some money around into the crypto market? Granted, I can't trade any of this for aftermarket. But what I can end up doing is, because I still have some I have some floating capital out there, and I know if I set up orders to sell some shares in different positions, so that Monday I can cover, basically pick up the covering of those stop losses and pick up, pick up the financial burden of those positions, that I can come back and I can actually make a run at some crypto, expand my crypto, mainly my Doge position, try and average down a bit and get a little bit better there for a run up, and then come Monday morning I can execute some of those trades to basically take the spot of the money that I use for crypto on the weekend. It's all, every once in a while it's good to go in and just rebalance your investments. With Shib, people need to understand until developers find a way to burn coins, it'll be tough price to go. Yeah, that. Hey, Shredder, welcome back, man. Welcome back. Welcome back. Crypto is a long-term play. If you get one that spikes up and you hit 10,000% and everything, and you become rich beyond your wildest dreams off of it, hey, happy for you. But crypto, you need to understand, what drives the price, and especially like you said on Shib, they need to understand that with how large the supply is, it needs a burn. Watch AMA on Clay's channel. The developers didn't answer a thing at all. 2 hours of blah blah. Yeah, I heard Clay was, well, it's not easy for, it's easy for Clay to be more entertaining, but I'm sure he was 1,000 times more entertaining than they were. Welcome back, Otter. Yeah. Grant, though, as much as I'd love to jump in, I may end up going through on Doge and setting some ridiculously low price purchases. If it gets down to this stupid low price, go ahead and buy some more. And I'm talking stupid low prices. Maybe just go in and set it. If it hits 11 cents a coin, buy a shit ton and average down. I'm that old that I get. Yeah, that's. Was like a presidential speech pre-scripted. Oh, okay, yeah. The AMA, yeah. So Shredder, if you happen to be looking at the screen right now, I don't know if you're driving or able to see. I've got AMC up on the board right now. I've got a green line, a yellow line, and a red line. If you went back through or were interested, that is an actual graphed out, marked out representation of the option trade that I entered, the buzzer beater that I entered before the market closed. I was talking about on Clay's stream earlier today. And all it is that the yellow market 1850 is the strike price that I sold the covered call at. Oh, not driving your home now? Yeah. So all it is, I opened covered calls with an 1850 strike price, so that's where the yellow mark is. I collected a 94-cent per share premium. So that is reflected in the $19.44. So essentially, if you take the strike price and add in the premium, in this zone, if it closed out, if it expired and got executed, in this zone I'm still making money off that. If I were to walk away from it and never buy back in, I would still be making money in this zone. Anything above there, if I had no intention of buying back in, anything above there would be a loss because it's above the $1,800 that I would receive per contract for selling 100 shares and the premium that I collected combined. So anything above here is net loss on the position. Now if it dropped back down, I could buy back in, And the 1614 mark here, this is, I always like to understand what kind of profit I'm looking for when I'm playing options. So this is if the share price drops to this value at any point, little asterisk here, any point not involving ridiculously high volatility, if it drops below this mark, at any point I can sell and collect 75% profit. So this is my 75% profit mark. Anything below that, and I just keep continuing to make more and more profit up until the 94 cents per share. Once it hits 94, I can't make any more than that. So when I said on Claybro's stream that I got 94 cents, it wasn't per I wasn't buying shares. What I was doing was I was actually selling a covered call. And because I got it at the very last minute, it actually froze, and this 94 cent that it shows on the mid, that is actually the price that I got my contracts filled at. So essentially for each contract, I don't know how much you know about options, but options contracts deal with 100 share blocks. And what I did was I sold covered calls, meaning I put up 100 shares per contract as collateral. So if it gets executed, I will get $18.50 per share. So this won't get executed unless the share price is actually higher than $18.50. So by putting up collateral, I receive a premium of 94 cents per share per contract. So essentially, each 100 shares I put up for collateral on this cover call, I earn $94 worth of premium, which is mine to keep. Now, with the Greeks here, the delta, delta and gamma are reflective of the price movement, and all it is for every dollar the price moves, this gets added or subtracted to your premium value. So just shy of $44 on a $1 move. When it moves $1, the delta gets added or subtracted to the gamma gets added or subtracted to the delta based on the movement, and the theta is how much it loses in value based on 24 hours. And by 24 hours, I mean if I bought it 1 minute before close, if I sold 1 minute before close and nothing else changed, the price remained the same, volatility remained the same, the contract would lose $9.50 just for sitting there. Sorry, Shredder, I bought all the shares, fire sale. Yeah. Yeah. Paul was saying if it hit 94 cents a share that he would be buying 2,000 shares. But yeah, Shredder, that's just some of the stuff. This channel is mainly dedicated to options trading. And, it doesn't matter if you're day zero or, day zero options just learning, or if you've been doing it for a while but just want to get more knowledge. We just come in here and we talk options. All right, let me see. I only understand buying calls and puts, not so much selling calls and puts. I'm aware about what you said about can't going above the green line. Well, the thing is, if it drops below this green line, then I've met my profit window. I've met the window where I can exit this position and capture the profits that were my goal. Oh yeah, the red line is essentially that's where it hits max loss, or not max loss, but that is the equivalent of selling the shares at $18.50 and losing out on the premium that I collected. Yeah. Yeah, and pretty much. So Shredder, all it is, you understand buying calls and buying puts. All it is, there is a buyer and a seller on every side of the trade. So if you're buying a call and you're paying, you pay the premium when you buy a call, you're essentially buying that call option from someone like me who is selling a covered call. So when you pay that premium, it doesn't go into ether. You're basically paying me that money for the right to execute that contract if it comes up and it meets what you need. And we're a smaller family, good people here, looking to help each other out. Yeah, definitely. Yep, definitely, Paul. So far, I can buy a call way far out for cheap. Yeah, depending on how far out you buy and how far out of the money, you can get calls really, really cheap. But the thing you run into, have you done much studying on the Greeks? We're gonna expand this out. We're actually gonna pull up all contracts right now. So currently, and these are next week's options. We're just going to go off next week's because they're the easiest to see. Currently, okay. Oh, yeah. If you've got an example, we can definitely go directly over to that example. Okay, so you're looking at the 720 on PROG? 7 July. July is 7, right? Wait, are you referring to these? Shred, are you talking the July 15th calls? Because I'm not seeing any for the 20th. Alright, so for instance, I got PROG that expire. Yeah, definitely. Because understanding the Greeks is a huge portion of it. When you look at the Greeks for long enough, you start to be able to eyeball run through the math in your head. Okay, what is your strike price? The 50 cent strike price? So 50 cent strike price, and what did you end up paying for premium? Because yeah, if you 50 cent strike, currently those are 84 cents per share per contract. And you look at it, you look at that theta. That theta is almost non-existent. Theta is your time decay. That is the number one killer. You'll hear people talking about days being a theta burn, meaning so you purchase them for $155. They have lost almost half their value currently. Now, if it runs up, you'll definitely be making money. So right now, they're 84. Each contract is worth $84. If the price of PROG moved up by $1, you'd be looking at another $93 per contract. So that would immediately run it up to $177. Break even is $205. like a rocket if it goes past. Yeah, because as it runs up, your delta will continue to increase as it gets higher and higher. So yeah, these are definitely good ones. You are down almost 50% right now on them. Your average is $1.95. I'm told to sell before. Yeah, if you hold to expiration and if it just trades sideways the whole time, every day you're going to lose a bit of value on them, and that is your theta. Theta is representative. If you bought at noon, by noon the next day, if nothing changed, you just subtract theta from the cost before. You're going to sell a week before. We're going to go off the numbers we've got right now. Looking off these, the theta, these are a week out from right now. So your theta burn would still be less than $1 a week out from then. Yeah, those could work out to be really, really good. Could work out to be a really, really good trade for you. I certainly hope it works out good. I'm not playing calls on PROG anymore. PROG, when it came to options, PROG beat me up. So I won't be actually buying any more calls for PROG probably ever. I'm just gonna continue playing with shares, because shares don't expire, and shares don't lose value to theta. I've actually got a list. A lot of the stocks that I play options with, they are yeah, that is correct. If it goes past $2.50, and all that is you paid your strike price is 50 cents, and you collected which turns into $50, and you paid in $1.55 per share. So basically, you just add your add the premium that you paid to your strike price, and that gives you your break even. So yeah, if it runs past 205, you're in the money no matter what. Yeah, and all theta is, if it's easier to see. I'm going to jump back over to AMC because it's got higher thetas, so you can actually see a bit more. So you can. So we're going to go. We'll go off the ones that I purchased, and if you look at the theta here. Oh, can't see the chat. Keeping hope alive. Yeah, I'm hoping PROG runs up too, because like I said, I'm actually looking. I might end up. I'll be doing a rhythmic swing trade on PROG if it doesn't actually break and start running. So the theta here, every day that this contract is open, it loses the theta value if nothing else changes. So the same thing, my contract is for, I received a premium of 94 cents per share. It'll lose a value of 9.5 cents per share every day. If nothing changes, just having the contract makes it lose almost 10 cents per share per day. I lost 100 today. If I put held for a month, break even was 185. I see your arrow. I'm on phone. The computer is my TV. Oh. Oh, okay. I see. Give me a second here. Better? What am I covering there? Okay, nothing. That's good. That's actually a better place to put it. Granted, you won't be able to see, whether I'm on single, bull puts, or whatnot. There we go. Okay, so now we can actually see the theta. Yeah, so here you've just got these are the three main. I've got Vega up on here because Vega pertains to volatility. It does not affect the price as much. It was already on here. I just didn't bother to delete it, didn't bother to move it. So yeah, delta is if the share price moves, delta gets adjusted whether up or down for each dollar movement. For each dollar movement, gamma gets added or subtracted to delta based on the direction that it moves. And theta is just how much value it loses per day or during a 24-hour period. And theta, as you get closer to expiration, your theta will increase. It's referred to as your theta ramping up. Because just like a ramp, it continues on, and then as you get closer to expiration, it goes higher, 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 until eventually it takes away all value from your options. That's weird having the picture there, because now when I got the charting up, I can't actually see my camera. If I ever get into streaming online gaming or any kind of gaming, I'll end up with another monitor just so I can have my whole screen dedicated to the game and just have a second screen off to the side with my live chat and everything. Oh, there's a bot. God. I guess I have a fair understanding of buying puts and calls. I only feel comfortable. Yeah, definitely, Shredder. Do what is comfortable for you. But if you're ever looking to expand, slowly, start studying, a little bit here and there, and if you ever decide to move into something, other than just buying calls and puts. The channel's always going to be here. The information's always going to be here. There are tons of other sources you can get the information from. But yeah, it's there's absolutely nothing wrong with just buying calls and buying puts. The main reason I like doing the selling, and I'm not sure if I think this was before you came back to the stream. A stock will either go up, go down, or trade sideways. As a seller, two of the three things happening are good for you. When you're selling options, if you're selling covered calls, if the stock trades sideways, you make money. If the stock goes down, you make money. If the stock goes up, you lose money. Same thing on the low end. If you're playing the low end, if the stock trades sideways, you make money. If it goes up, you make money. Selling just gives you more ways to make money, more directions. Either sideways or up, or sideways and down, and that's all a lot of it is. It's just covered calls are dangerous because you are risking your shares, you are risking assignment, and in a MOAS situation like AMC, the potential to miss out on the MOAS with whatever you have locked up as collateral it is dangerous, and it's not really dangerous if you take proper steps, but you have the greater potential to lose money. So yeah, that's why I was making that joke on AMC's live stream that AMC can just trade sideways all week. If it's trading sideways all week, I make money at the end of the week. Or if AMC runs down to AMC needs to drop to $14, and then I'll turn around, because right now the money that I received for premium for selling those covered calls is sitting by waiting for a stop loss. And if the stop loss gets executed, well, that money is basically getting my shares back. All right, there's 4 to choose from before a decision is made. Arrow up, arrow down, sideways. I don't recall what the fourth. Yeah, I'll take it slow and steady. It might be. Yeah, that's and you may look at it and realize it's not for you. And there's, like I said, there's nothing wrong with just playing calls and puts. Paul, I could tell him about the wheel, but that that introduces he's comfortable buying and selling calls right now, and that's where he wants to be. And you have Robinhood. Yeah, Paul and I both have Robinhood also. Robinhood is where I do all my trading, just because Robinhood I can enter into custom strategies like the you'll hear people talk about the Condor and the butterfly, the iron condor, iron butterfly. There are option strategies called the broken wing versions of those, which on Webull you've got the condors and butterflies, you've got all those, but they're preset strategies. And I haven't found a way to actually do custom strategies on Webull. So yeah, I use Robinhood because I do a lot of advanced spreads that I can't do using preforms. Yeah, Paul, the wheel is a powerful option tool, but it's on that selling side of the house. That's and a lot of people, people get nervous on the selling side of the house, especially if you're selling covered calls, you're risking your shares. Well, if you're running the wheel and you don't have a problem with selling your shares, but the thing is, sell your shares, potentially miss out on MOAS. And the same thing if you're selling your cash secured puts. Well, whatever price you're selling those cash secured puts at, that money's tied up. So the wheel is good if you're in a nice stable stock and you have no problem with selling your shares. But a lot of what I'm doing right now is to not sell my shares because I don't want to sell to the hedge funds. There is a chance that if I get executed on my covered calls, there's a chance that it's a hedge fund buying those shares. There's a hedge fund on the other side of that contract from me, and I just would rather. I would rather soak a little bit of a cash loss myself than help the hedge funds out. Now, it may be possible, because every time I do any part of the Viper, I'm taking that money, I'm buying more shares. There may reach a point where my share count is enough to where, say I'm taking 20% and running that towards the Viper, I may end up taking 10% running that towards the wheel. It all depends. The wheel for PROG? The problem with the wheel for PROG, Paul, is if you look at it, So if you sold covered calls at the $1 mark, you're collecting 34 cents for the premium. Well, that's going to get executed, but if the price is higher, you're losing out. So the only way to be safe is if you go high-low with it. Your covered call at $1.50. Well, you're collecting $4 per contract only. Then you flip to the other side. You're selling a cash-secured put at the $1 strike price. You're only collecting $2 premium. So PROG, it's just, the problem with PROG is how low of a share price it is. You don't see, on the 1 week, you don't see a lot of capital rolling in. And I talk about nickel and diming the hedge funds. Well, this you're basically playing one coin per line on a penny slot machine. That is super low. It would take you a ton of time. You'd be moving a ton of shares in order to execute on that. Now, if PROG was bouncing back and forth between $1 and $1.50, yeah, it makes sense, because if your covered call was executed and you got $150 per block, and then you're able to buy back in for $1, well, you're making 50% profit just on your spread, or $50 profit per contract. It's just your premiums that you'd be collecting week by week wouldn't be that much. I have almost 18,000 PROG shares. The call options, 2,000 AMC, 3,000 CEI recently because it's cheap and the right sector. My wife, Black Rifle Coffee, and a couple others. We missed the boat on a bunch. Yeah, Paul, it really is. If there was more volatility in PROG and it moved between $1 to $1.50 more reliably, it would be worth it. But at that point, you might as well just skip the premium and swing trade the shares themselves. Been trading for over a year. Dogecoin made me the money to get all these. Now getting into options. Oh, okay. Well, yeah. Sitting on 18,000 PROG shares, you are, man, any kind of decent run up and you're making bank, like serious. We are be shredding those PROG shares. Now, this is an interesting one. Yeah, just a little background. You've got some good established positions there. That is definitely the place to be. So, that being said, this might be devil's advocate in disguise. Yeah. It would be, because Sam don't come around here no more. I don't know. I'm not going to comment. It's just... Sorry, got an itch inside the ear. Damn, I'm share counts like that. I almost need Shredder to adopt me. Oh, okay, Matthew. Cool. Yeah, it's like guest name when they pop in. It's like, hey, Josh, how's it going? You get certain people you know their real names outside. Like, of course, Devil's Advocate is Sam. Why is it itching inside my ear? That's just so wrong. He's already a millionaire. That was weird today of who was who. Oh yeah, that was funny. Everyone changed. And of course Clay missed mine. Everyone else is like saying, no, not ear hair. It's I spend most of my day because of Minnesota laws and DOT regulations. I spend most of my day with a Bluetooth in my ear, so my ear itches, especially when I get the Bluetooth in. It itches unmercifully. It is just, when you get that inside the ear itch and you got your Bluetooth in and you're talking to someone on the phone, it is, like, okay, give me a second, I'll be right back. And you're sitting there, wanting to stick a shovel in your ear to scratch, or a rake or something. It just, no, not painful, just more of an annoyance. It's like, Rhino needs to be removed from chat. Really? Does he cross the line, or? I know there are times that wrestler will make comments that are up for approval, and none of us will approve. Just some of his content, some of his comments cross the line, and my key thing is, if I see disrespectful comments, things that I view as disrespectful, I will time people out. I can't stand disrespectful comments. If I see stuff like that, I do remove comments. I do time people out. If I see it, if I see comments that are disrespectful, or could be perceived. It all comes down to impact versus intent. If I see something that someone could perceive as mean, hurtful, harmful, anything like that, I will remove the comments. So irritated, earbuds don't fit well and they fall out of my ear. I don't wear them. I used to have tinnitus, lots of loud sounds, self-inflicted. I understand. Yeah, it's and the thing is, the Bluetooth doesn't sit in that well, so I always, it's especially bad during the summer. But when I'm driving the vehicle and everything, I've got to have a cap on to hold the Bluetooth in, so it doesn't fall out, because they even with the hook over the ear, they don't sit right. Yeah, so I don't know, and I don't need to know your specific financial situation, Shredder. But you'd mentioned having 18,000 shares of PROG. So potentially, this is we're on the call side of the house. It's single options. I started trading on May 7th of last year. That was actually when I started. I was in crypto since January of last year, but I started in the actual stock market on May 7th, and I actually spent 2 months. I did regular. I started off, made a bunch of mistakes. Then I started working on a long-term investment portfolio. Kept running with that for a while, and about three or 4 months into investing, I took 2 months and did almost strictly options trading. I actually started off with Denison Mines, ticker symbol DNN. And I started playing with options with them to get an understanding as I'm watching, hundreds of hours of videos. and I went ahead and grabbed Denison Mines because I got in super cheap on. It's a low price stock, sub $1.50. It's in the PROG range right now. And I got in and just started playing with options till I started to really understand them. I don't want to start anything. I don't have a wrench in that chat. That's why I deleted the comment. Oh yeah, no problem at all. It is something. I'll keep an eye out for that though. So pretty much, you say you're sitting on 18,000 shares of PROG. Now this is 1 week out, and the numbers could change. Could change next week. Well, they change day by day. But if having 18,000 shares, God, that's a lot of shares. If you had 18,000 shares, you could go through and if you took 1,000 shares, and remember, an options contract deals with 100 shares. I didn't lose 100 on my puts this month. I gained 10 times that much in knowledge. Yeah, gained in knowledge. So if you took 1,000 shares, that is enough for 10 contracts. Now, the way a covered call works is you put up your shares as collateral and you receive a premium. You're the other side of someone buying a call contract. Now, the thing is, this is 1 week. These are expiring next Friday. If you don't think PROG's going to hit $1.50 by next Friday, you could take a small portion, and I always stress, don't risk your entire position. And at 18,000 shares, 10 contracts would be 1/18 of your position. So you still got a whole lot of position behind it, but you could essentially enter into 10 contracts, collect $4 per contract, so you'd pick up $40. $40 isn't a lot, but if you sit there and if you're doing it every single week, and this is more towards nickel and diming. You've got a fairly large position. People that do come in here, they don't have large positions. They're trying to grow their accounts. That's the whole thing behind the Carbon Fiber Viper, which is that is the CFV in the channel, and it's mainly directed at AMC. Oh, sorry. So essentially, you can start the Carbon Fiber Viper with just a couple $100. Now you may have like AMC, someone who has they may only have like 20 shares, and they're looking to increase their share count. So say you had 100, you got 20 shares, you got a couple $100. So we'll say $200. So you look at it, and on here it's listed as the vertical. You would go, and you had $200, and you could go out and spend $200, and you could buy yourself what would that be? 12 or 13 shares at the current price right now. Or you could take that $200. Oh, we want a week out. So you got $200. Now, when you're playing spreads, you put up collateral, which is equivalent between the difference in your strike prices, $16.50 times 100, because you're dealing in a 100 share block. So it would cost you $50 to enter one contract. And for that $50 of collateral you put up, you would receive $18 worth of premium. So essentially, you've got $200, and you think that AMC is going to trade at the current price or higher. Because remember when I said when you're selling, the price can do three things, and two of them are good for you. If AMC at close, when the options expire is above 1650, you are 100% winner. And your winning is $18 per contract. Doesn't seem like much, but remember, the person who entered this, they're entering it for, we'll move up a strike price because it's $20. It's a lot easier of a number to work with. It's been a long week. I've had numbers flying through my head like forever. So we're going to move to an easier number to calculate. Same thing. There is a 50-cent differential between your prices. You're going to put up $50 worth of collateral. You will collect $20 worth of premium. But because you had $200, you were able to enter this contract 4 times. Essentially, you are gaining $80 in premium. If it closes above $17 at expiration, you are 100% in the profit. If the stock price goes up to $18, you are collecting $20, you are at 100% profit. Profit, I like it when it's unlimited. Yeah, that is why people love buying calls, because the profit is unlimited. Your account size and what you're looking at, and the fact that you're playing calls and can afford to straight up play calls, that is actually a perfect place for you to be. Like I said, this was more behind people who are trying to start out and trying to grow their positions. PROG call options are 7 contracts, I understand, to sell in the money before they expire. I don't want to be in the position of losing my private stock. Yeah, the contract lets you know what the max is. Yep, and for calls, your profit will always be unlimited. If you're buying calls, it'll always be unlimited. And that is part of the risk. And the fact that you know enough to know to sell, to exit your position before then, because there are people who hold the expiration and the price dwindles away. It doesn't, they had chances to get out of their positions and they didn't. The fact that you know this already, you are leaps and bounds above a lot of investors out there. Because a lot of people will hold to expiration and just be watching that $1. They'll watch that $1 and wait and wait and wait, and they had chances to get out. And it's not all, sometimes it's not about making money. If you're in a losing trade and you recognize that it's a losing trade, and if you realize the trade is going to get worse, at that point it's no longer about making profit, it's about capital preservation. It's about making sure you don't lose more. And that goes into, my covered calls. That's why I set stop losses. I am willing to take the loss of money, just like, you may hold calls long and see the value of them go down and, exit your position at a loss or exit at profit. Well, on AMC, I've already identified for me where my profit and loss zones are. So yeah, Shredder, you know what you're doing. You're in that zone. You know how you want to trade, and that is great. That is exactly where you need to be, and that is, like you said, that is your comfort zone. So definitely, if it's working for you, definitely keep doing it. Sounds like what I am doing with Shib. Which part that you're doing with Shib, Paul? Is it a bit off a lot? It was cheap when I did it, but so far I was guided on stream to sell. I have no other options. They are expensive. I looked around. Yeah, it's the thing is, both Clay and I, Clay's touched on this. I touch on this all the time. Oh, losing money. Yeah, Yeah, Paul, it's the. But see, there's a difference in losing money on because you only lose money with crypto and with stocks if you sell. Options, you can lose money just by holding. PROG is the only one I have left. When Meta Platform was in the red, I took a chance to buy a put. Yeah, there is actually a. There are people who have. They have classes out there on how to play options, and 90% of those classes, I'm going to tell you exactly what 90% of those classes will tell you when it comes to trading options. And they're specifically geared towards day trading options. So I closed everything down so I couldn't actually look. There is a formula involved, and most of them will teach you to play the SPY. They will tell you, look for a date approximately 10 days out. And see, it's important on the SPY because the SPY, the Qs, your major indexes, they have 3 expirations per week. If you look 7 days, 10, 12, that's not a full week, 14. So as you can see, there are multiple dates out there because they have options that end on Monday, Wednesday, and Friday. So they'll tell you, look for a date that is 10 days out. You want to look for a strike price $2 above the current share price, but between $2 to $3. You want to look for a premium that is approximately $200. So we're going to open up the 10 days, and when I opened this up, we were on the 7 days. Oh, so I wasn't cheating any way at all on this. So 10 days out, we want calls, single calls. Current price is at 37. Yeah, 437. So we want to look at right about 440 is the mark we're looking for. 440, we go. We do not have a premium close to $200. This would not be a trade to enter. So I can tell you right now, looking at this, that the SPY has been moving upward because as you're getting upward momentum, your call prices will be higher. As you're getting downward momentum, your put prices will be higher. So if we go over to the put side of the house, and I would, if you're looking to play puts on SPY, I would better recommend you go play the VIX, the volatility index, and that's a whole nother thing. Puts, as you see, puts go downward. So yeah, it's just right now with how the market is, volatility has prices that are so priced out. But essentially, they would tell you that on SPY calls, you want to get that $200, maybe $300 premium, and you want to sell them before the end of the day to capitalize on a run up. Yeah, that's something around decimal point, like $2 is not $2. Yeah, it's $200 because it's that much per 100 shares. So yeah, looking at it, in order to buy those 10-day out calls on the SPY for $2 to $3 above the current strike price, you're looking at $490 you'd be putting up. That is a lot of money to risk. That's why they tell you to look and see if the premium is around $200. And that's what a lot of the classes will teach you as far as day trading and options trading. They'll teach you to play calls on the SPY, and a lot of them will give you almost that exact formula. It's a tried and true formula. That's why they get away. That's why they teach it, Because if you see that formula, chances are that the market's going to be favorable to you, and that'll end up making you money. Right now, without all the volatility with everything going on, options prices have potential to be a lot higher. If you want to be super risky, $10 up for $164. But that comes into a lot of it. Day trading, you are not holding beyond. You open in the morning and you are not holding beyond close. And a lot of times you're just looking for a good run up. You'll hear Claybro talk. Clay will talk about it in the live stream. And this is Monday morning quarterbacking here. But yeah, if you bought calls somewhere in here and saw this run up would be indication to sell, to get out, to capture profits. Because if you're day trading, you don't care, you don't care what it's going to close at. You don't care what the option chain is like. You're buying just for the purpose of exiting that day. Between you and the community, I'll perfect my own way. I'm so glad I'm not totally new at options now. It's only been a month. Yeah, a month in. It sounds like you're doing good. Sounds like you know enough to be comfortable in the strategy that you're playing. Let me I'm real quick, just to have a little fun here. I'm gonna hey Paul, you're still in the house, right? Oh, let me go further out just so I can we're gonna have a little fun here. God, we're just all goofing around anyway. Okay, yep, Paul's still here. So this is a regular Condor. Difference between a Condor and a butterfly is essentially it's your inside prices will be together. It'll form a point. Oh, yes, I'm married. Haha, funny. Your inside share prices will be at the same mark. In fact, no, let's go Iron Condor. Sell, because like I said, I like selling options. I'm not into. I don't buy that much in options. I prefer to sell. But we've got that set up there. So I am gonna let me set this up real quick. So I can go through here on I can go through and click on all these different options, strategies, and it'll, these are pre-built in here. For some people, it is absolutely great that they can come in and see pre-built strategies, pull boxers or briefs. I like the boxer briefs. The best of both worlds combined. So this is an Iron Condor, and Paul, I'd spoken about this earlier. I watch stock market almost all day at the phone with all of you. Oh, yeah, a lot of days, especially lately. I just Commando is best. A lot of days lately, I've just been turning off, not worrying about the market. So I'm actually real quick going to oh, nope, I built that wrong. Hang on, let me clear. I'm trying to set something up here. Now wait a minute. Yeah, I built that right. Okay. Buy a call. Sell a call. Sell a put. Buy a put. There we go. Okay. So I'm gonna. Luckily, nothing. My trading's not actually open on my phone right now. So on the screen right now, this is the Iron Condor. Now, Paul, I don't know. I might have discussed some of these, before, but you hear me talk about the broken wing strategies and the reason why I use Robinhood when it comes to my option trading. Oh, I have to move the camera back over into the other place so I can actually see what I'm doing on the screen while I'm doing it. So on the screen, that is the Iron Condor. So as you can see, there's profit in the center, loss on both sides. When you get outside the 19 and outside the 1750, both those turn into both high and low turn into losses. This is what a broken wing looks like. I don't know how well you can see on there. So as you can see, rather than having two loss zones, you can build your broken wing in order to give you protection against total loss one direction or the other. So it's a way you can play a tighter spread in the center and give yourself a buffer either to the high side or to the low side. Those are your iron wings, or broken wings. That's why I'm on Robinhood, is because I can't do stuff like that on other brokerages. If I lose 155 by July, it's okay. That's just the option I took. Touche. We see a good picture. Yeah, it's a. I've actually got a pretty decent camera here. I've got one of the Zoom Q2Ns. I actually got it as for recording music. Both on acoustic guitar, on my drum set. Just got it for recording music. So it's also got really good mics. I'm upstairs, and if people are listening to TV too loud downstairs, I'm not talking loud, but just at a decent volume, the microphone on my camera will actually pick it up from downstairs to upstairs and in other rooms. But yeah, that's options can be super simple. You can play straight calls and puts. You can go in, and if you have Webull, you can build structured options. Once you learn the structure of them, I can't remember. I know, Paul, I did a walkthrough with you one night on. I think it was on a bull put spread, which is, it's not. It's kind of an advanced option because anytime you're dealing with spreads, you're dealing with multiple strike prices and finding a middle ground or finding a good buffer zone. Things like the condors and butterflies. So you feel it's best to work options and hold stocks. Which do you feel comfortable at? My main thing is I hold a large portion of my shares off to the side, never to be touched until the MOAS. I play with a portion of my shares in the form of covered calls, and right now I've actually for AMC, the position I entered today, 40% of my position is locked up in covered calls right now. This is a gamble, and it, it's a gamble, but it's a calculated gamble. But the other 60% right now, that is, if MOAS breaks, it's not being touched for anything. The reason why I sell is because sell options, I like to collect the premium. The premium I earn goes into either doing more premium earning contracts or to buy more shares. So yeah, I feel comfortable, like you were saying, Shredder. You're going to find the option strategy that works best for you. You said between you and the community, I'll perfect my own way. Well, the carbon fiber Viper, that is my strategy. I play covered calls on the high side, and I play bull put spreads on the low side. That is my strategy, and I do pretty good with it. It's a way for me to constantly be generating extra money coming in that I use to buy more shares, to where I can expand my option positions. It gives me more options, you could say. I got to grab a drink real quick out of my backpack. But the great thing about that strategy for me is I can tone it down. I can reduce the amount of contracts. I can play it super safe. And by safe, let me go back into. Oh no, not covered stock. Where? Oh, vertical. God. Why, thank you, Shredder. That's impressive. You're definitely knowledgeable. Yeah, it's like I said, I've watched hundreds of hours of videos on options, and I found what works for me. And my strategies, don't work for everybody, but I figure, let people know, let them make an informed decision. So as far as being safe, so we are on, if you notice, it says vertical and puts. The vertical puts, that's your bull put spread. I'm banking on the stock trading sideways or going up. Now, the closer I get to the current price, the more premium I earn. So I can take a safer position and go further away. By taking a safer position, there's a better chance of my collateral being released to me in full, and I collect less of a premium. The more risk I take, the more premium I collect. So if the market's getting kind of sketchy, I can back away. I can take a safer position, still enter the same number of contracts, but build in more of a buffer. And I'm getting less premium, I'm earning less money, but it's a little bit safer, and I still got a little bit of money coming in for it. What I did today, on the other hand, as I stated, today I went cautiously aggressive. Now I'm still, 60% of my position is still safely locked away, not to be touched, ready for the MOAS. I like to have a good buffer between where the share price is and where my, especially on covered calls, where my covered calls are. 1764 is where I entered into my covered calls at. That was the share price when I entered my covered calls. I am less than $1 away from that. This, as far as aggression goes, because I think we are coming, I don't think it's going to be the March 3rd date like everyone said, but with where the share price is, I think being aggressive right now might be a little bit better. So yeah, I went with the 1850 strike price. I have never the 50-cent increments allow me to be more aggressive. I can fine tune my I can fine tune where I want to attack the hedge funds at. And I think that next Friday, I think next Monday we might see a gap down in market open. And if we get the gap down, if we gap down in below that 1614, that's my 75% profit zone. That is exactly what I'm looking for. So I'm looking for that gap down in pre-market or into market open to close that position and get my shares back. But yeah, I went aggressive on it, less than $1 away from the strike price. So true. Gather knowledge from everyone and make what you think is the best decision. Yeah, like it said, look down there at the very bottom, the very, very bottom. Not financial advice. We are all friends here. I'm just a friend who thought something was really, really cool and decided to share it with all my friends. What would you do if I sold calls to you? Would you pay me that premium? We're going to stop there before I get a copyright block. But we're all old enough. We all should know that. We all should know that song. So yeah, that's. I'm cautiously aggressive this week, and I would not have been heartbroken if I didn't get the fill. I know the risk this is. When the fall started in November, I had bull put spreads, and it blew through it, and I never even had a chance to get a stop loss in place. I was figuring my stop loss, and it blew through so fast. I preserved as much capital as I could, but I understand the risk, and I understand that taking being that tight into the share price, risking my shares. There's a roulette strategy. If you bet on black and lose, double up and keep betting. Don't recall the word for the strategy. I compare this to the market is addicting. Oh, Wolf of Wall Street. Meow. Here. Yeah. I miss the meow. And it's not just betting on black, because your roulette table, you can bet on black, you can bet on odd or even, or you can bet half the field. Yeah, roulette is such an awesome game. Awesome. Up here they call them parlor games. It is such an awesome game for people who are good at math and good at calculating out odds. It is roulette is a good game for those who know numbers. I've not actually seen Wolf of Wall Street. I plan on watching it sometime. I've just never gotten around to it. He says that a Wazi, it doesn't exist. Wise Wazi. I haven't seen the movie. Now I'm probably going to have to go watch it so I can actually understand what that means. Yeah, but I hope Monday I get the move I want. So I am nervous about this. Like I said, I've never gotten this tight in before. Covered calls, I usually like to have about, as bad as this sounds, I like to have about a $5 to $6 spread on, between the current price and where I enter my covered calls. That tells you how aggressive I'm being right now. I'm usually at a $5 to $6 buffer, and right now I just entered in less than $1 buffer. Oh, it's all options time? Oh, okay, I'm definitely going to have to watch it then. Watch the movie, I give it a 10. Yeah, that's, if it's dealing with options, I can add that into the hours of options videos that I've watched then. Yeah, when I was looking at it, I saw the 2050s, because if you look, we got almost 8,700 contracts at the $20 mark. These 2050s, if you're willing to risk it, you're still collecting $46 per contract. But that $20 mark, that is such a nice hard line when you look at it. Above and below combined are only 1,500 contracts. You got a 4,000 block there, a 4,000 block there. No man's land right there, less than 1,000, and then you get hit with flipping 8,700. Yeah, the 2050s, I debated going in and, instead of doing like a 40%, I was looking at that and I was like, would I risk half my position on that? Maybe I'm just getting deranged. Maybe I'm just addicted. I don't know. But I run the numbers. I run the psychology behind it. Paul, you've probably heard this a million times. Dollar marks divisible by 5 are key psychological levels. Playing the next level above that key psychological level, your 2050. A lot of times, especially with AMC, those $5 marks are so powerful. Those 2050s, I thought about, going a lot harder against it and, playing those 2050s. I thought about it. But I just think with how the market is and with how Mondays are, rather than playing the long game on the 2050 to run all the way to expiration, I think I can actually make more money playing the 1850s, doing a Monday turnaround, and looking for a point to re-enter later on in the week. I can play multiple plays, or even just 40% in. Who says that Monday I can't exit 20% or exit half of that, get 20% of my shares back, and roll those into another set of contracts to ride for the week? There's so many different ways to play this. And that's why I like that AMC, for the most part, not completely, but adequate enough for my needs, has stabilized. Oh, that's not far enough out. Date chart. There we go. Much better. Expand. 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 As we saw from the push down, right about in here, it did dip down, but it ran back up again. We got kind of a lazy W here. Yeah, kind of a lazy W. Came back up, dropped back down. We're starting another upward trend. But I think we're still going to be looking. I just don't know how long it's going to take us to get back above. And that's where my bet is. Actual Wolf of Wall Street is part of our community with its true story stock market options, IPOs, drugs, rock and roll. Oh, okay. Yeah. I've seen doing certain options are very expensive for, let's just say, 1 week out there. What's too rich for your blood, Shred? I'm not sure if I missed or some of that. If I didn't get the context of some of that. Oh, let's go back on the 5 minute. Yeah, that 5 minute looks good. I got 80 AMC, gonna get 20 more Monday, no matter the price. Just want to hold 100. Yeah, 100 is a 100 is good because if we get the run, and I've stated my price prediction before, $1,748.81. That is my price prediction for the top tick of the MOAS. For me, knowing my personal financial situation, I only need to see, if I see 500 a share, I'm golden. That's I still think, I still respect my price position, but I only have to get up to $400 or $500, and that's life changing money for me. Options that are out there can be very expensive. Oh yeah, sure, they can definitely be expensive. Simon made a killing on Tesla puts. Not long ago. In fact, it was just this week. I had Tesla on the top of the screen here. They were the first stock up here because Simon was coming in, and I did a little bit of technical analysis for him on Tesla, and Simon made a killing. He did super awesome on the puts he was playing. Expensive for such short run. Did I hear you say that you can do options each day? Yeah, I can. Shredder, I can enter in an options in the morning and exit those options later on that day if I get a good run. Or there are some people who are susceptible to pattern day trading, so they get so many day trades they can do in a 5-day period. Well, a good technique for that is you enter your option position right before the end of the day, and you exit your position the next morning. During the volatility spike in that first 15 to 30 minutes that we usually see in the market. Usually the first 15 to 30 minutes, you see a huge volatility spike, and it's a dangerous time to enter or exit positions unless you know the window you're looking for. So a lot of times I refer to that as the hands-off period, because people can lose a lot of money in that first part of the day. If you know what you're doing, you can make a lot of money off that first period. But yeah, I can say somebody susceptible to pattern day trading can open Friday, close the next Monday, open Tuesday, close Wednesday, open Thursday, close next Friday. And they can even throw in a day trade in there and still be good. If if you're not susceptible to pattern day trading, you can trade options. You can enter and exit all day. Tesla was just over 1,000. Now it's, I don't know, 800. We can pull Tesla up here. In fact, oh shoot, I missed it. Look at that. That was a whole bunch of market orders set to go. Bottom tick right at $700 even. That was a whole bunch of people who knew exactly where they wanted to be. So yeah, I actually did analysis for, I don't even know how far back it was. Let me go on the 1 hour. Yeah, I couldn't tell you where it was that I did that. I think it was on this downward run right here. Uh, Simon was playing puts, and he was worried he had some puts that were in danger of. He was already playing with profit, so he was a step ahead. He had already secured his initial amount, and he was playing with the extra profit that he had, and he was worried about a set of puts that he had, and I basically graphed it out, looked at it, and I'm like, yeah, you should see a break here, and I told him, looking at it, you may have a channel there, a break here, and it followed and it broke the direction he needed, and I think he did one more round of puts after that. But yeah, Simon Simon was a rock star. Yeah, about 3 weeks with Simon. Yeah, Simon killed it. Be great seems like as soon as I make a decision, it goes the other way. Yeah, that's the market shredder. There are times like I will not play options on PROG because I swear to God that PROG is out to get me. PROG is taking it personally, and PROG just wants to take all my money. So PROG, I am shares only now. I'm not interested in playing options in PROG anymore because PROG doesn't like me. I never did anything to PROG, but it just for some reason it decided it didn't like me, and it's personal. I never did anything to it. Hands off period windows. Yeah, there's you can see it on. We'll jump back onto AMC here. Go to the 1 minute, and we're gonna pull our window down to where we get the whole day in. So we have the opening, and let's go out 15 minutes, half hour, went a little bit longer, and then pulled back up. Let's go back to the next day, or the previous day, I should say. I'm going to drag this down just a little bit. We'll lose definition, but it'll look a little bit better. So pre-market, market open, run up, back down. There's your first 15 minutes right there. Run up on half hour, continued up for about the next hour, or the first full hour of the market. Some days you can see it really good. But it's very discernible in, look at all the bounciness through here. We are on the 1 minute chart. Whole bunch of bouncing, and then the market settles down. The market calms down quite a bit. And you can see that in lots of places. Here we are, market opened. Huge spike down. If you had entered here the day before at market close, if you entered into a covered call position, if you sold a covered call, or if you bought a put, if you figured it would gap down, if you're buying puts and looking for the gap down, you buy at the end of the day. Market opened, huge spike, drop down. There's your first 15 minutes. Drop down huge and already started to recover back up. Here we are at the first half hour of the market. So we gap down in the morning, huge downward run. Ran back up, recovered. Still a little spiky in there, but the market calmed down. So you just kind of start to see patterns develop, start to see the market react a certain way. No gap on this from one day to the next. Huge spike down, first 15 minutes. Next 15 minutes or so, ran back up. Then the market decided where it was going to go. You start to see little patterns, little trends, and they don't always pan out. This isn't a guaranteed blueprint for success. It's just I notice the market tends to do certain things, and I tend to, if I'm going to enter into a strategy, I tend to lean towards the strategy doing what I hope it does. I've gotten bitten before, but that's why I have stop losses. It's like there's an appetite at some parts of the day. Yeah, that's right. Pan out sucks at times. Yeah. I love the lines on the screen though. I I can't remember if I said it while you were in here or not, Shredder, but back in the day, I used to do all my options trading just off eyeballing. I I wasn't with putting a whole bunch of lines on the screen and stuff. I started playing around with it actually during a live stream. I'm like, hey, these are cool. Let's see what this looks like. I feel like right now I feel like I feel like Matt Kors. I feel like TMI. Putting all the lines on the screen, and I had a lot of fun with it at first. But now I realize I can eyeball. I can still eyeball my options to this day, and totally play it like a cowboy. But man, it's now that I start doing actual analysis, start charting out and marking everything out and looking at it. I like using all the tools available to me, and I've actually I did pretty good eyeballing. I'd probably say 60 to 70% win rate. It's gotten a lot better since I started actually charting and graphing and marking everything out and looking at it. My win rate, I still lose. I don't win every trade. Anyone who says that they don't make losing trades, they obviously haven't made many trades and they've gotten lucky, because it is so easy for the stock just to you pick a direction and the stock decides it's going to run the other direction. And you're like, okay, well, I'll switch up my strategy. I'll exit the one, I'll exit the one and then jump on a new one, or I'll add a position to cover the other side, and then it breaks against you. There are days, the stock market's going to be out to get you, and it's going to be personal. They're going to look at it and say, Shredda, I'm going to attack you, and I'm going to take as much money from you today as I can, and every move you make, I'm going to do the exact opposite move as soon as you do it. There are days it will do that. It will. It'll have a personal vendetta against you. Sometimes you can just feel it. Yeah, it was one of the, I don't know if you were in here for it, Paul, but it was fairly early on in the channel. I actually eyeballed a stock. I made my trade. And I think it was in the aftermarket, we ran back through and did technical analysis on that trade, and I almost got the perfect tick on my entry, and it played out perfectly. And I eyeballed it; it just looked right. I entered it, and I've had other positions that had the exact same setup. I enter them, and they turn south on me. The trade just falls apart. Stop losses hit, and at that point, your stop losses hit. Well, I preserved my capital, or I preserved my shares. I took a little bit of a financial hit, and it's a financial hit that I had set in place. I was willing to accept when I entered. Damn right. After I make my first $500,000, I'll make several million afterwards. Yeah, that's the mindset to have. Now me, I'm Yet this is more information that Paul has gathered from Paul. Paul's like Paul's in here all the time. I love having Paul in here because, man, it's great to have some one-on-one teaching time and to have people who are actually, people who are interested in what's going on. Because there's some people who pop in here and there and everything, and there's nothing wrong with that. If somebody has a question, pop in, ask it, and if you leave after the question, there's nothing wrong with that. That's why I'm here. Sorry, no, I did not find you till Jen. Glad I met. Well, I'm glad I met you too. I'm glad you're in here. But I the long game is a long-term dividend portfolio. That is actually what most of my portfolio is catered towards long-term dividend investing, and I know that I need right about $250,000. At $250,000, with how I'm set to structure my long-term portfolio, I will be paying myself. I will have zero debt, and I'll be paying myself $3,000 a month in dividends. That is the end game right there. So people are talking when Lambo, when this, when that. I'm looking at debt free, and I'm looking at a dividend account that'll pay me $3,000 a month to do nothing. That is my end game, and I don't even need it at that point. If I had no debt and vehicles or everything's paid off, $3,000 a month. That's most of that will just get reinvested and just continue to grow. Should asking Paul, how long have you been in the market? Paul, I keep it real. You're keeping it realistic. Yeah, that's would I love to exit my position at $10,000 a share? Of course I would. Who wouldn't? I mean, at $5,000 a share, who wouldn't? $3,000, who wouldn't want all these super high prices? But if you're holding for 5,000 and it runs up to $1,748.81 and then drops all the way back down, then you missed the MOAS. You're out of it. What state are you in? I am, most times I'm in a state of confusion. No, I'm in northern Minnesota. Like that little bit of humor there. Hey Shredda, also, if you know anyone who might be interested in information in the channel or just hanging out or anything stock market related, we're a small channel, we're trying to grow, we're currently at 72 subscribers. If you know anyone who might be interested in subscribing and hanging out, it would be much appreciated. Cold burr, wow. In Georgia at the moment, Florida is home. Yeah, I lived in Augusta for a while. I've got family who lives down in Gainesville. I've got family all over the country. I was in the military. Both my parents were in the military. Most of my uncles were in the military. I've got family scattered all over the country. I've got adopted family for people I served with that are now family members. Hey Josh, welcome to the live stream. Paul saying, I have a friend who's a day trader, told me 20 years ago to buy Netflix, which I didn't. Started crypto January 2020. Also do crypto mining. Only reason I got into AMC was crypto is... What is up, Josh? Coming by to stop by and say hi? So, Josh, I don't know if you heard. I did a thing today. I got super aggressive with AMC with covered calls. I don't know if you were in Clay's live stream when I was talking about it, but I bent. Okay, I didn't bend. I broke some of my rules. But as I stated earlier, they're more like guidelines. So yeah, if you see on the screen right now, Josh, we've got a green line, a yellow line, and a red line. That is a visual representation of the options that I entered today, the covered calls. I'm fortunate to trade while my spouse is on contract. I'm former service. No, I actually exited in 06. It didn't sound right. I had to check my DD-214, which I keep a copy of on my phone. Yeah, I got out actually in 2006. So I was in from 98 to 06. Former school bus driver. Oh, you were stationed at Fort Gordon also. Yeah, I actually did. See, I started off life as a Cav Scout, 19 Delta, and I reclassed to 91 Whiskey. And part of my training was for Mike 6. I did 8 months of the LPN program in the Army, and I was there. I did my rotations there at Eisenhower Army Medical Center, and for a while there, I worked in the ER also, kind of on the side. In addition to being in school for the Mike 6 program. After April, we were probably traveling to Wisconsin. I'm sorry. Are you being forced to go to Wisconsin? No. MOAS is tomorrow. Yeah, isn't the MOAS supposed to be kicking off in like 6 hours or so? Oh, no problem. Yeah, and hopefully that's a thank you to me and to Shredder. Shredder's a vet also. Yeah, Saturday, don't tell anyone, top secret. I retain a lot of info. I remember you told me a medic and everybody's favorite. No, we are working that thing, hospitals. Oh, okay. Yeah, thank you, Paul, for the thanking. It's well, it's like yesterday during you had the did I stream at midday or did I stream after Mark? The days are blending together, but with everything going on in the Ukraine, part of my message on that also was that, if if you know anyone who is overseas, not even veterans, but if you have friends or family that live in Europe or live in affected areas, or if you know service members, across the world, serving in Korea, serving in Japan, any different bases, touch base with them. Let them know that you're thinking about them, and I know around the holidays, if you're overseas, they like to get care packages together for those who are stationed overseas. I don't know with the Cerveza protocols going on around the world right now. What all you're allowed to send to people in what you're allowed to send through the mail, and postal regulations for military post office. I couldn't do it if it wasn't for Frank first. Shredder couldn't do what? Did I miss something? My dad served in Korea 51 through 50 or till 53. Yeah, here's a weird one. Technically, we are still at war with North Korea. There's it's weird because of course, if you served in Korea, I think you're eligible for even now. You're eligible to join the VFW, Veterans of Foreign Wars, because the Korean conflict is still technically going on. There was never an actual peace treaty. I think we're just still in an armistice. So it's funny because my grandfather was a Blue Piper during the Korean War. He was one of the crew members on the Quad 50 cal air defense guns, and they would take those, and they had the mud pack bunkers and stuff. So they would use the 50 cals, the quad 50s, to chew up the bunkers, to chew up the face of it, and then they roll up like a 105 recoilless rifle or a 110 howitzer, artillery piece. So they would use the quad 50s to chew up the bunker, and then hit it with a good armor piercing round. So it's kind of funny. My grandfather served in Korea in the army, and then much later down the way, I was in Korea also for 2 years. Lights out at 9 p.m. North Korea. Google Earth that country. You can. Yeah, it's. No, I think that don't they keep Pyongyang keep that lit all night, just as propaganda to try and show, hey, look, our capital's a thriving, bustling city. I think Pyongyang, they keep that lit up at night. Somewhere around here, I've actually got my oh my god, I tightened it too much. Somewhere around here, I've what a small world. Yeah, it is a fairly small world. Why can I not open my soda that I just closed? What? Yeah, we've been at this for a while now. Obviously, I'm getting a little bit tired, but I've got my coffee cup around here from the Joint Security Area, from the JSA. I've even got somewhere around here. I've got a piece of from when they changed out the barbed wire. They upgraded the wire. I think they might have gone to Constantina razor wire. I've got a plaque with a piece of barbed wire from the DMZ. Where did all my grip strength go? I just had this open a few minutes ago. Oh, nothing wrong. Shredder, we're in here sometimes talking about soccer, race car driving. We talk about most everything in here. This is not strictly just a stock market or options channel. Talk about metal music, different music. Oh, there we go. Oh, I finally got it open. All right, Shredder, you have yourself a good evening, man, and we'll catch you. We'll catch you next time. Like I said, I try to be on here on market days, days the market's open. I try to be on here. I try to be here on every day, whether it's midday or an aftermarket. But if we're here, it's not all options talk. You can come and talk just about anything, and we all just hang out. So yeah, you have yourself a good night. Have a good weekend. Yeah, just have a good one, man. Okay, do you think Shib will get to $1 by the end of this month? Ah, two-part answer. Per coin, no, but I think if you purchased $1 worth of Shib, you might have a good chance of it still being worth $1 at the end of the month. So, no, I don't see. There are people who tell you that they think Shib. Well, if something just insane happened, yeah, Shib. Mathematically, it is possible for Shib to hit $1 by the end of the month. The probability of that is so microscopic, you might as well calculate it on the Planck scale. There are people who are talking about, Shib to a penny by the end of the year. I think with the hit that crypto's taken, I think it's more realistic that by the end of the year, Shib might hit a tenth of a cent. If it makes that far of a move, I definitely think that we will. I definitely think we'll burn a zero by the end of the year. Just joking. Sorry. Yeah. It's Josh, I still think even in a decade, unless there are significant advances to the burning of coins, I still think a dollar even a decade away still isn't feasible. Josh made me ask that. Oh, what did he hit you up on Twitter and say, hey, ask him about sheep coin? Burning is not needed, just needs to be. No, yeah, definitely a troll, Josh. Josh trolling us. No, even with increased users, it still comes down to the cap, the market cap, the value. Sheeb at $1 would have a higher value than all of the world's economies combined. I mean, that's I want to make a sheepdog hot dog stand. I'd buy that. Depending upon what condiments you have that goes with your sheepdog, I'd totally be down for that. Now, a sheepdog, would that be like an all beef brat or something, or a beef frank? Josh, DA's name is Sam. Oh. Oh. Oh God, I just can't help looking at it. I don't know. I know what I was thinking, and I know what I'm doing, and I know the risk, but dang, DANG, dang. We'll see how it plays out. I think the funny thing is, I think Clay on his live streams he's so used to me just when I pop in and let people know what option trades I'm in and everything. He's just so nice to hearing the trades, and he's like, yeah, nice, man. And he's probably, I almost wonder at times if he sees what I'm typing, and he sees, the data I'm putting out there, but doesn't actually comprehend how tight of margins I'm going for now. And I keep getting worse and worse with it. Keep getting more and more, I'm taking more risk because I do feel that we are getting a lot closer to the MOAS, and it's not going to be any one thing. It's there'll be multiple things, multiple catalysts involved in causing the MOAS. But I just think that now is the time, especially sub 20. Considering it wasn't long ago we were in the mid 30s, even up into the mid 40s. I think at these price points it is just really important to increase share count, and we're at such a good level right now that it has ramped up my aggression towards getting more capital, and in turn getting more shares. Yeah, Paul, have you been streaming? I have not gotten notifications for any of your stuff in quite a while. In fact, I'm going to look at it right now. Subscriptions. Oh, Old School changed his thing up. Streamed 8 days ago. Oh, I don't know why it changed it up from all to personalized notifications. Okay, yeah, looks like you streamed. Yeah, because Paul, I never got notification when you were doing your crypto mining streams. Because I was actually wanting, I see those now, but I actually was hoping to be on for those so I could, try and absorb some of that information, and if I had questions to be able to ask them. But yeah, I never got notified on your post. Charge about $500 a driveway for a season, shoveling extra $100 to $200. Oh, okay. Yeah, there are days I'm, depending on what I'm doing at work, guys, like throwing on Paul's live stream and just listening to it. I can't always be looking, can't always be commenting, but just hear everything going on. The one day when I heard you backing out of the driveway, I'm like, are you hitting the seams of the driveway there? Because I could hear the popping of the blade against the concrete on the seams. I was like, oh, I know that sound. Put a few super chats with Clay about live streaming. Very few, if any, new viewers. Yeah, it's used to blow driveways and shovel cleanup. It's more fun to go out sledding. Oh, yeah, Paul. I might. I'm gonna. I end up losing all my clipboards on. 'Cause I have regular comments that are clipboarded. Clay gave me a good push. No takers. Yeah, it just seems like And the funny thing is, I'll send a super chat or Clay will read something about the channel here. Hey, have a good weekend, Josh. Have fun. Be safe. We'll catch you next week. Thanks for stopping by. If you know anyone interested in the channel, help get the word out. Help grow our little community together. But Paul, yeah, it's Clay will go on there and I'll send a super chat for the channel. He'll be like, yeah, anyone interested in options, go check out Frank's channel. A lot of good information there. And not 2 minutes later, somebody will ask him an options question, and it's like I can almost feel Clay rolling his eyes, like, didn't. Not a problem. We chat again. I have zero social media. I'm old school. Yeah, a lot of social media is overrated, but I am on. My Twitter is my main thing that I do now, just because of the channel. Just because of the YouTube channel here, that I'm on Twitter just so I can get notifications out. Other than that, face crack, I'm hardly on. I pop in every once in a while. I don't do much social media other than going on Twitter for the channel here. At least you know what you're talking about. Anyone can do what I'll do. Well, Paul, I think branching out with the crypto mining aspect, as far as building rigs and stuff, that could definitely be a good way to grow your channel. I have no problem. I have no problem with popping in and hanging out with you while you're doing driveways and stuff. Oh, face crack, yeah, dude. There are people, I swear, that if you could find a way to go from the jack on the bottom of their phone into their vein, they would be mainlining Facebook. I'll tell anything I do about mining. But yeah, also, not just I know you do the plowing in the winter, and you said during summer you'll do some stuff. God, brain's not working. Do some of the lawn stuff, but also just kind of I like it just because I like to see. I need to build a rig. Yeah, if I could, if it was financially good. Frank, hang on a second. My electric bill is included in my rent. Yeah, I just, Josh, I just don't know that much about crypto. That's, I know there is a guy here at the other end of town, who has a crypto mining rig, and I know that because I was chasing. There was stray signal coming in across our cable TV lines on the main line, and me and the other maintenance guy spent half a day tracking out where this stray signal was getting into our cable plant from, and he had the connector on his modem. Super chatted about mining with Conquest. Spent 2 hours answering questions. Josh was there that day. Oh, okay, cool. Yeah. Yeah, like I said, I'll probably go and check those out now that I know they're there. But the other maintenance guy and I, we spent half a day tracking out stray signal getting in on our getting into the mainline cable TV lines. Come to find out, you know the screw-on connectors on a cable modem or on the back of a cable TV. Well, the connector on his modem wasn't tightened all the way, and from all the interference from his mining rig running, it was putting signal back onto our main line. It was causing interference with everybody's internet and telephone in the town I live in. It took us half a day to track that out. Next day, Conquest was asking Clay to verify what I told him. That's messed up. Yeah, that's... Same, I know cable guys that run on top are taller buildings my boss owns in Chicago. Yeah, if it's not worth your time, Paul, that's well, since it's just the two of us, or just the three of us here, just the two of you here with me, like so my brain's not working. There's some comments. There are comments that were made that I was none too happy with a while back. Somebody made the comment that that plugging my channel on Clay Bros. Oh, going about 40 high. Oh, okay. Oh, wow. But somebody's saying that I should have, that if I was forced to super chat every time I plugged my channel on Clay Bros, I'd move Clay into a new tax bracket, and that I should have to super chat in order to that I should be super chatting every time I plug my channel. And the same person one day, when I was in chat, said I'd love to, need to find someone to ask questions for because we don't have an options person on our channel. So yeah, there are some people out there, and I don't worry about them because, let them be them. Like I said, wake up every morning and say I'm going to be a good person. Well, there's some people that wake up and just say that they're going to be dicks. Milwaukee, New York, Management and Development. Yeah, people are haters, and but I'll always be nice, I'll always be respectful, I'll always be polite, even when someone's being a total dick. As they said, they make about $400 a month of each one. Yeah, Paul, like I said, I'll be having a lookout for that. If I see it, I'll nip it in the bud. That's. Haters get nowhere. You guys are down. Yeah. Hey, thanks, man. It's like I said, it's people were somebody told a your mama joke in Claybro stream, and I can't remember who it was, but I came on and said, every person who wakes up and says, I'm going to be a good person today, is beautiful. Every person who wakes up and says, I'm just going to be a good and decent human, then you're a winner. You're a winner. Physical appearances don't matter. It's what's your character. Are you a good person? Yeah, I saw you said just be nice. I remember that now. Oh, that's what you're talking about. Helium. So is helium? I take it helium's a type of crypto. I was reading it and talking about helium, and I was like, what? Yeah, my brain was not computing. Oh, let me see if I can. Was it on this phone? Which phone was that on? Pistachio perch? What? Oh, okay. Yeah, when you're like mining for helium, like, well, helium's a gas, and I was thinking like the Tabana gas mines of Bespin City or Cloud City on Bespin. I was like, what? Brain just was not correlating. Oh, I guess I deleted it. But yeah, it's Oh, wait a minute. Oh, I'm getting up again. Old school. I don't have the pictures anymore, but I still got the actual papers. This is my crazy stuff. These are actually, I don't know how well you can see it, but those are the calculations and the math involved in calculating signal loss across coaxial lines on different frequencies. And well, we do that. We do the calculating of voltage, volts, amperages, watts, calculating out, for powering of cable plants. We got calculations for, light levels for fiber optic. So when I say calculators are created for guys like me because my brain gets so overloaded with math at times, it's hilarious. Oh, we'll put that on, but oh my goodness. Rhythmic pistachio perch. Yeah, so guys, I'm gonna wrap it up. It is almost 9 o'clock here. Been doing this just a little bit shy of 4 hours today after work, so just finished dinner, need to go shower, just got home, have a good day. We'll chat more again. Yeah, definitely. Thanks for stopping by, guys. Thanks for just hanging out with the end of the week here. So yeah, Paul, Josh, or she kills me. It's Friday. Yeah, Paul, Josh, and who's in here earlier? Shredder was in here earlier. Thanks to all y'all for coming by and just spending a little bit of the end of the day at the end of the week, and certainly I hope people gathered good knowledge from this, and we'll do it again next week. Hopefully next week I have exciting news to report in my options attack on the hedge funds. But hopefully y'all have a good weekend, have a safe weekend, and hope both y'all have good health and good trades. Granted, only thing you're trading, will be crypto over the weekend. But I'll catch up with y'all. Monday, and we will do it all over again. So yeah, good night to everyone, and have a wonderful weekend. And let's MOAS next week.